Welcome to a Purple Chips web update for Friday, August 24th. The information contained in this presentation is based on the criteria of the Purple Chips model and is not intended to be a solicitation to buy or sell securities or investment advice. This presentation has not been approved by the author's employer. The information contained herein is believed to be accurate but cannot be guaranteed. Stocks can be risky and you should consult a professional before investing in the stock market. Today we have a market update. I'm John Schwinghammer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. We have a market update that we've just updated the targets for the top 25. And there's a few very interesting things that came up. And I'll show you what we have here. Just to summarize, we updated the targets on the top 25, so you'll see those on the website. Most of the valuation ranges moved higher as the earnings per share improved, the EPS. A few stocks moved to higher valuation ranges, which is very exciting because, in effect, this is a signal that the long-term bear market that we've been seeing for the last 11 years is actually near its end. It doesn't mean that we've ended or that we may not go back down, but in fact, there are signs that we're coming out of the bear market. Some of the stocks that moved to higher valuation ranges were Ecolab, ECL, Walmart, symbol WMT, McCormick, symbol MKC, Church & Dwight, symbol CHD, Abbott Labs, symbol ABT, and IBM, which is symbol IBM. So now let's look at some details. I want to take you through each one of these and just to explain why we've seen a higher valuation range. And so here's the long-term chart of Ecolab, and I changed the formatting of the chart based on some feedback that I received. So here you've got the black bars are, of course, the stock price, and the purple heavy line here is the earnings per share line over the long term. So this is the 20-year chart, like I've always shown you, with the line, the EPS line in purple. Now, what's interesting about this, I'm going to grab this line and move it, and in effect, you're going to see what used to be the valuation range. What used to be the high end of the valuation range would have been around here. Okay, so in effect, the valuation range was lower before. And now you can see that with the stock that moved up, hold on, I'm just going to draw it here. When we went up to this point here, it dragged that EPS line up so that we were higher than the previous highs over here, which had been the high valuations before. So that's a good sign. So you see that the valuation range is actually going up. That's a good sign. Let's look at some other stocks too. Let's go and look at, for example, the next one that caught my eye was Walmart. And Walmart is really obvious here. What was the high end of the valuation range before was around 65 when we were down here. And now with the move up that we've had, we actually got up to, we got up to $75. And so the prior valuation range was something like this. And the low end of the range would have been around here. Now this is the low end of the range, but as you can see, we've moved up. So we've broken that valuation range. Let's look at McCormick. Just a minute. McCormick MKC. Same situation again. We're moving into the high end of the valuation range, and we've broken the previous high range. Okay, so if I take the EPS line and drew it before, this would have been the high end of the valuation range. Now we've moved up to this level here. So again, a higher valuation range, which is a good sign. Now let's look at Church & Dwight. And so you'll see the same phenomenon with all these stocks. Once again, we're at the high end of the valuation, but we've broken the previous valuation range. Now let's look at Abbott Labs, ABT. Same situation again. Previously, the valuation range, the high of the valuation range would have been something like this here. And now we've gone away from that. And last but not least, we'll look at IBM. Same situation again in IBM. We've barely moved into a higher valuation. So when IBM went to $210, that was a higher valuation than previously. The previous high valuation would have been around 200. So that's a good sign. It doesn't mean that the bear market's over yet, but these are signs that we're emerging from the bear market. So that's all for today. I'm John Schwinghammer, the author of Purple Chips, and thank you for watching.